Welcome to Mex Moves, our weekly podcast on Mexico business and finance for the global audience. How are you, Eduardo?
Doing well, Damian. How's everything?
Good. So this week we have two interviews, an in-depth interview with Pedro de Garay. Pedro is the co-CEO of GBM, top Mexican brokerage house, investment bank, help democratize access to global and Mexican capital markets over the last few years. He's also the founder of Siclo and various Mexican high-end restaurants in the US, including Cosme, which is one of my favorites. Great interview. Recommend you stay on to listen to it. And we have a shorter interview with Shauna Hemingway. Shauna is a former top Canadian diplomat, been posted in Mexico where she currently lives. She's going to talk a little bit about this huge delegation of Canadian businessmen that invaded Mexico City this week. And Eduardo, you and I think we're going to talk about the tax breaks that the president, Claudia Sheinbaum, unveiled with Salma Hayek for filming in Mexico. A little bit about Aeromexico, very strong results, huge cash flow it's generating right now. And then we can also talk about Kavak raising $300 million. And then a little bit on Walmart Mexico, which also had results not quite as good from the market's perspective, at least. So should we kick off with movies and Salma Hayek?
Yeah. Big start in Mexico City to announce a very significant, I don't know what you thought about it, Damian, proposal to give Mexico's film production, which we have covered in the podcast before, a boost by giving tax credits of 30% on ISR or the income revenue tax that Mexico places on corporations. Becupla, a lot of artists as well, not just Halma. There were others surrounding the president on her announcement last Sunday. We have talked about how Mexico has become, in a certain way, I wouldn't say a mecca, but an interesting place for companies to come and film. This is in addition to what she had already announced a few days earlier, and I don't know if you saw that also, Damian, to boost the time and the amount of theaters that will show Mexican productions on Mexican movies. So obviously there is a sense that could be an industry where Mexico could attract capital or attract interest. And by doing this tax credit, by boosting the amount of time that movies have on theaters in the country, that more production will be produced here in Mexico, helping the talent that we have. There was also a little bit of changing the law for dubbing people that have expressed concerns that AI could take the sound of their voices and use it for free on dubbing. And we know that in kids' movie, dubbing is very important here in Mexico. So there is a concerted effort by the administration to try to help this industry in Mexico have a better footing and become more attractive for those that are seeking to lower their costs in the film industry.
That's right. So they can, in order to get these tax credits, I think 70% of the production work needs to be in Mexico. So there are sort of conditions attached to it that encourage them to do this. And international companies can use these tax credits in different ways. If they work with a local Mexican production company, they can pass them on to that company, which can then reduce its tax bill. Or they can actually, subject to certain conditions, they can sell the tax credit to different production-orientated entities in Mexico. So it seems like a real tax break. Well, it came at the same time as Netflix opened its new Mexico City headquarters. If you saw that, Netflix has already announced a $1 billion investment, whatever that exactly means, in Mexican production over the next few years. It's a it's a pretty big office, 8,500 square meters. There's a huge, almost 300 square meter post-production area. They're talking about 400 employees, 15% growth. The co-CEO, Greg Peters, was here to unveil it. And Francisco Ramos, who's the head of Latin America, is from Chiapas, gave a pretty interesting interview to Milenio TV, Regina Reyes-Robles, which I got a chance to listen to, basically saying that apart from creating jobs and providing content for Mexicans, which are very avid Netflix watchers, as most of the world is these days, it's very, very strong for the Mexican brand, having Mexican production. For Mexican culture, it has sort of benefits beyond just the economic ones. And I think having a strong sense of national identity is one of Mexico's very, very, very significant strengths as a country and as a source of creative product. And Netflix understands that. And in his interview, he talked about how what works on Netflix is programs that are very rooted in a local culture, but have some kind of global resonance. And that's why these Korean programs do so well, here and everywhere else, and Mexican programs often do well here, of course, but also very well because they're hyper local, but with global themes that kind of resonate with people elsewhere. So it's a really interesting interview about how Netflix is planning to produce in Mexico and what works on the platform and what doesn't work. And then he also talked a little bit about some of the programs that they have coming up, which look pretty interesting. So I think Mexican producing in Mexico is going to be it's going to be one of the themes. And Claudia Sheinbaum's obviously very supportive. It should be mentioned that her stepson and the father of her grandchild is a filmmaker, so she has personal sort of ties to the industry, and she clearly has known Salma Hayek for a while. I was looking on the internet, and there's lots of photos of the two of them together going back years now. So I think overall, there's a personal commitment, and it's a kind of different. They're very much different to how AMLO looked at these sort of quote unquote elitist industries, where he didn't really want to give much support to them, more focused on kind of popular culture, let's say. And I think we have something that's more more of a commitment to culture in general from this administration than we had, and that explains perhaps these tax initiatives.
I hadn't seen the Netflix opening of its headquarters in Mexico, to be honest, here, Damian. That's great news. And it's a little bit of soft power that I think Mexico had lost in the past with the previous administration. Maybe I don't think Claudia sees it that way, but I'm happy that she's doing it because it's an industry that also employs quite a lot of people. I mean, in my street in Mexico City, there's always been a lot of filming, and you could see how many people they come, bring, and do, and they have these trucks, and it's all different type of companies. So I think that's good news in the general panorama of Mexico not growing at a good rate or not having investment. It's good that at least in this industry they're moving in the right direction.
So moving on to Aeromexico, they reported their first results after the fourth quarter results and full year 2025 results. These were the first results after their IPO late last year, and though revenues were pretty stable, margins were very strong. Had an adjusted EBITDA margin for full year 2025 31% and an operating margin of 17%. So they generated over last year $900 million of operating cash flow, and that helped them cut debt significantly and build up their cash position. And their last year I think they returned to shareholders $200 million. They've returned $1.3 billion overall since December 2023. So, it's a company that's generating a lot of cash, which is obviously very good for the shareholders. It should include Apollo, which rescued the U.S. private equity fund, which rescued Aeromexico at COVID. Arguably not so good for Mexican consumers who just are paying higher prices for airplane tickets. I just bought some tickets to go to Cancun midweek, in fact, and ended up paying about 7,000 pesos, for over $400 for a relatively short flight. So, the premium is what's driving these very good margins. Premium, business class, first class is almost 40% of revenues now. But also interesting, they said that unlike a lot of other airlines, their economy class isn't losing money. It's break even or slightly profitable. So they kind of wash their face on economy, make tons of money on business and first, and then also they're doing a much better job on their loyalty program, which is making more money. And I think they're just about to launch a new credit card with Inbursa, which will probably make them additional money on the loyalty side. So it's pretty remarkable turnaround. This company obviously went bankrupt, was in Chapter 11 during COVID, and now it's making $1 billion. And it's a combination of these higher fares, which have been outstripping inflation. And then during COVID, they were able to bring down leasing costs. They're benefiting, like all airlines are, from a weak dollar, in our case, a strong peso, which cuts oil costs in local currency terms. And then, of course, in addition to that, even in dollar terms, oil prices have been under pressure. So a lot of the costs have been going down. They got some labor benefits from COVID that made the operations more efficient, pricing going up. I mean, I think the real challenge is, and they talked about this in the conference call, is there aren't any more slots in the Mexico City airport, so it's difficult for them to grow. The DOJ, the Department of Justice in the US, is not allowing them to add incremental flights to the US while this kind of dispute between Mexico and the US gets sorted out on cargo from the other airport, the Felipe Ángeles airport. So there isn't a lot of growth, and Aeromexico is obviously very linked to the Mexico City airport, but meanwhile making a lot of cash, and meanwhile passengers are paying more money for their tickets.
Yeah, I saw a little bit the reaction from Aeromexico's top management regarding the merger of Viva Aerobus and Volaris. They were very neutral, but I got a sense that they think that this will go through with some conditions, and they kind of like indicated that they're waiting for those conditions to be clarified, because I think they could win some potential slots or some benefits out of it. But I got the sense that they think that this is the merger will go through, which we've talked about it here extensively. I don't got a sense that they were too worried about it. They obviously attend to different type of clientele, and maybe they will win some advantages in terms of slots or timeframes for their flights to come and go. We'll have to wait and see. That was their approach, a more wait and see approach than anything else. But yeah, in terms of the results, they did quite well.
Yeah, I mean, on the conference call, it's pretty clear, and I guess it's very logical that they see this merger as positive for exactly the reason you say, Eduardo, which is one, they're going to get some more slots, and they need more slots to be able to grow. As a condition for the deal to go through, if it gets approved. And secondly, it will, once they're merged, if it gets approved, and it remains unknown if it does get approved, it will reduce capacity. And they actually talked about in the conference call saying, they hope this would, the typical management euphemism, rationalize the market, which basically means take out capacity and give the incumbents higher pricing power. So yeah, it's clearly a great opportunity for Aeromexico, the merger, if it goes through, and they'll be gunning for it. Now what they need to do is get a deal with the DOJ, which I'm sure there will be, which is using pressure from United and UPS to to be able to also get some slots in Mexico City. I think more for cargo, because I don't think they like operating exclusively from Felipe Angeles.
Sounds good. Shall we move to the
Kavak?
Yeah.
What about so I thought that was interesting. They raised $300 million additional dollars, a Series F. I wonder how many series you can have. At what point do you kind of
the alphabet
run out of letters? With this kind of trend of keep companies staying private, for longer, I guess you get more and more series. But the interesting thing is it was led by Andreessen Horowitz, known, I think, by insiders as A16Z. And that's their sort of first, as far as I'm aware, major investment in a Mexican Latin American company at this stage. And they're the sort of top two VC fund in the world. Ben Horowitz was in Mexico late last year at the Tech Week, and I went to his talk, which was it was clear he talked in that open forum about Kavak and how much he admired it, and we should kind of watch the space for news. So it doesn't come as a big surprise. He talked very positively about Carlos Garcia, the Venezuelan CEO and co-founder of Kavak. And Kavak has been an interesting story because they had they were one of the first companies to raise money in the startup world in the 2001. In the sort of hype, they raised money at nearly an $8 billion valuation. And last year they raised more money at a $2 billion valuation. And they seem to have restructured the company quite effectively. And it's become a company selling used cars, as I think most people on this call will know, on this podcast will know. According to a white paper interview, they sold about 120,000 cars last year and are expecting 40% growth this year. But in addition to that, they've gone big on credit for your cars, and that is probably a large slice of their profits at this point. In addition to that, they have a marketplace where other people can sell cars on their marketplace and they get a cut. That's probably very, very high margin business. And in addition to that, last year they rolled out a opportunity to get credit on your existing car, for other non-car related purposes. So basically using your car as collateral to get credit. So all of that, according to the company and according to the interviews they gave to different news outlet, means that in December they were at the consolidated level profitable. And that's just 1 month, and maybe December's sort of unusually good month for, because there's a lot of liquidity with aguinaldos and everything else. And they've kind of done quite a good job of selling this, especially to Andreessen Horowitz, this AI angle, basically using AI to acquire and attend customers. I've actually spoken to some of their AI agents on the phone. It's pretty impressive. You don't think you're speaking to an agent. You think you're speaking to a person, and they say, and I'm sure it's true, that their AI agents are more accurate, more productive, as well as massively cheaper than in-person call centers. That they use AI for credit scoring and underwriting, so basically proving approvals and pricing, and they use AI for fraud to help combat fraud, detecting anomalies and things like that. So they've become very AI-centric. They hired a bunch of data scientists. Before AI was that trendy, 3 or 4 years ago, they bought a kind of data science company, and they've kind of been quite aggressive in embedding kind of engineers and data scientists and mathematicians in their business model, which put them in a very good position to sort of embrace AI as it's become more developed. So good news for Kavak. Obviously, they wouldn't say at what valuation, except I read that it's at a higher valuation than the I think it was 2.2 billion round last year. So things are picking up, and most people want to buy a used car with attractive credit, and having more competition and more capital in that sector is obviously good for the Mexican consumer and the consumers in the other markets where they operate.
Very interesting. The news and very interesting, the AI that they've managed to accomplish. I haven't tried that, Damian, but it's interesting that you did and that it worked. Applications of AI are on the rise. We heard a week ago about how software companies suffered a hit because of the new Claude prompt that allows you to code without knowing anything about coding. So AI is actually gradually creeping up in our world with this functionality that wasn't there a few months ago. And the data element that Kavak is doing well, very much into the tech element that it belongs to. So, and the 300 million shows, especially with I thought they got 200 million from Horowitz, right? Which was the largest player in the transaction. So it shows you the interest that the company is raising. Again, I kind of felt like Kavak had lost a little of its glamour that it had at the very beginning when it really revolutionized secondhand car sales. I tried to sell one of my cars to Kavak, but it had a little defect. They were very, very thorough in scrutinizing the vehicle. Good for them. So yeah, I think it's a positive news again to have fintech that basically is a Mexican company doing that well.
Yeah, actually my last 3 cars have been bought on Kavak. Sadly for us, I'm not paid to say this by Kavak, but I was quite happy with the service and still have the last car, and it works well, and price seemed to be good. So I'm a fan, and let's hope that they bring they with this money bring down interest rates, which are still very high on new cars and on used cars. So on startups, fintechs, just very quickly, Platicard got its full bank operating license, and so according to the podcast Estrategia del Día, Bloomberg en Línea's podcast, they're going to be ready to be offering kind of full banking products, and I guess EPAP guaranteed deposits in March, so within a month. And according to something I read in white paper, their loan book has grown from 2 billion pesos, $120 million or so, to in September 2024 to 8 billion in September of last year, 500 million. So they've been growing their loan book, which right now is entirely or almost entirely through credit cards, but they're going to be offering a full range of banking products. So meanwhile, Nu, which started the process a little bit after Platicard, is still waiting for its operating banking license, but I get a sense that the CNBV is kind of moving a bit faster than it was under AMLO and wants to promote competition. There's the banking convention in mid-March in Cancun this year, and was in Vallarta last year. My guess is that they're going to want to unveil these new banks at the convention where the president's going to be. So hopefully Nu will get theirs by then. Plata will be there. Nu reported another big loss, having sort of almost broke even in sort of September, October, November. They lost another $30 million in December. This time it wasn't to do with a deterioration in credit quality, which seemed to be a little bit better, but massive increase in operating costs as they gear up, I guess, for a bank. And so they're going all in. Just to lose $30 million in 1 month is pretty impressive. And they said, as we mentioned, that they're going to invest over the decade. They plan to have invested over $4 billion in Mexico. The company has struggled a bit, and in this new world of a lot of competition from startups and other entities, is Walmart, which reported full year results as well. Sales grew only 5.5% in 2025, and there was quite a big shake up. I mean, last year, as we saw, they got rid of their CEO Ignacio Caride, now Guilherme or Guy Loureiro, who was the regional CEO for Canada, Chile, Mexico, is retiring in March. So, they've brought in new people, new governance, new board, and they're basically going to focus very much on everyday low pricing, reducing the number of SKUs or the number of items in the stores to make their business kind of simpler, easier to manage, presumably more efficient, and pass on those efficiencies to the end customer. But that definitely the market was expecting slightly better numbers from Walmart, which has always outperformed the overall retail market in Mexico, and now is struggling a bit.
I also saw that its e-commerce was not as good as expected, and that shows you that the company is also struggling on that end. But the competition on the digital world is tough, and they might have to work on those lines to generate a greater revenue flow and profit margins.
That's right. I mean, I think a lot of analysts are saying they're kind of being hit on the one hand by Mercado Libre and Amazon, which are growing faster than them in e-commerce. And on the other hand, they're being hit by the hard discounters like Tiendas 3B, Netto, Bara from FEMSA, which are also growing faster, which generally sell fewer SKUs, private label, and they've been slightly stuck in the middle. But never underestimate Walmart. They're obviously going great guns in the US and Canada. They've made these changes, and I'm sure they'll be able to turn around the ship. But last year wasn't their best year, and the stock did underperform what was a buoyant stock market.
We've seen them face tough times and then bounce profoundly, not only in Mexico but also here in the U.S., where they've had the rough times, and then they take matters into their own hands and are able to bounce back. Shift the personnel shift you mentioned, probably they don't mince their words when they need to change people that they don't think that it's not producing as high as they expect, and so we saw that happening again, and so we'll have to see. Like you said, never underestimate the giant. So we'll see.
So just final thing from me before we move on to our interviews. I read some stories in Mexican papers that sargassum, which is a kind of seaweed that's been a plague for the beaches in the Riviera Maya and Cancun, has come back much more than last year. According to one story I read, the stock of Caribbean sargassum jumped to 1.7 million tons from 500,000 tons in December, so 1.7 million tons in January, and that probably means that that sargassum will find its way to the Mexican Caribbean beaches. It's been a problem. I've been in Tulum and Cancun, and it absolutely affects the quality of the beach experience, having to wade through seaweed to get into the sea. So and even last year, Cancun passengers, which is a pretty good proxy for tourism, it's pretty much the only way to get to Cancun, it's by plane, was down a bit, 29.4 million passengers from over 30.4 million passengers in 2024. Different reasons, security, strong peso behind that, but I'm sure the sargassum's not helping, and there's not that much you can do about it. I think it's driven by global warming, and I think it's driven by petrochemical effluent in Brazil and other places that gets turned into this sargassum. There's lots of new technological kind of slightly crazy solutions that are out there, but meanwhile, it is marring the beach experience a bit in Cancun and the neighboring Riviera Maya.
Yeah, no, it's global warming, and what you said, Damian, I think the feeding element that the oceans now have because of the drainage of either petrochemicals or other thing into the ocean makes the sargassum grow much more than it used to. And so it doesn't hold itself up where it's supposed to be held up, or where it was held up before this time, and now it's spread all over. It's a direct indication that the planet is changing. Obviously, not for good from my point of view. Something that we're all exaggerating, and everything should be fine. But I disagree. And all the Riviera is trying to cope with it. Like you said, they're trying to find uses for this material. I don't know. I heard that some maybe it could be used for textiles or things like that, or combustion. But the amount that it's getting on the beaches of Mexico, in that part of Mexico, it's tremendous. And I've heard that the smell is not necessarily the nicest in the world after it's there for a little while, if it doesn't get picked up. So hopefully they'll find a way to use it, and productively and efficiently and quickly. But I don't think it's going to get any better. On the contrary, unless we do something about the world's climate, it'll continue to be a problem for that area of Mexico.
Terrific. So let's move on to the interviews. So today we're joined by Pedro de Garay, co-CEO of GBM, one of Mexico's leading financial groups, largest investment platform in Mexico, brokerage house, bank, investment bank, and so on. Pedro is also the founder of Siclo, the exercise studio, and a co-founder behind the US Mexican restaurants Cosme, Damian, and Atla. I especially like the restaurants because I'm obviously Damian and my son is called Cosme. So,
really, that's fantastic.
But they were brothers, as you probably know. I guess that's why.
Yeah.
Patron saints of doctors. They looked after lepers. So, Pedro, great to have you with us. I was listening to another podcast you gave with Cracks with Osotava, and you mentioned that you started life off as an equity analyst at GBM. I was also started off my life in Mexico as an equity analyst after being a journalist for a bit. So I wanted to ask you to apply your skills as an equity analyst to GBM, the bank that you co-head. I was looking at the numbers, and you've got, according to the official data, it might not be correct, you've got 24 million accounts, which obviously isn't the same as clients, but very modest profits in the 9 months of last year and also in 2024, and therefore a return on equity that's in the single digits, lower than the return on equity of your most direct peers. So the question I have is, how do you explain this immense success that GBM has had in attracting so many accounts, so many clients, having such a big impact on the financial sector in Mexico, and the relatively modest results to date? Is that because this is a hockey stick and you'll very soon be posting great numbers, you're just building a platform? Or is it because you overestimated the willingness of Mexicans to trade stocks actively, at least here in Mexico locally?
Well, first, thank you for having me here and the invitation. I think in that question, we need to separate what the numbers that you are seeing is the public company. The public company not only has the operating company of GBM, but also has a large portfolio of investments, public and private. So it is a kind of different to see these numbers when you see that company. The company that I can talk is the operating company, which is basically where our clients are. And yes, we do have 24 million accounts, open accounts. That is just a number, because what we actually have is around 5.5 million active accounts. The rest are just accounts that has been fully open, fully compliant open, but not yet active accounts, not yet with money ready to invest in their accounts. That is one big difference. The other is that we have been growing these past years, and this year and 25, and we are seeing in 26 as well, is to keep on growing on 40, 45, 50% per year on revenues. Already profitable company, regardless what we are investing in growing. And what we are more willing to do is to keep on investing on growth. What we want is having a lot of Mexicans giving this big step from not having their money to work, that putting their money now to work. It is a huge difference for themselves, for their families, for their next generations, once you know that you can do so much more with your money putting to work than just putting it in a bank account or in a saving account. We need to give financial advice. We need to give financial planning to people, and that is GBM's goal.
But isn't GBM's goal as you are a public company, but a company with a lot of shareholders, to do that while maximizing your profitability?
Of course, I think what we are having right now, well, I don't know if I can say it because, as you know, we are public and I don't know how public these numbers are, but the margins are growing at a fast rate of our profitability on 25. We're expecting to increase that on 26. I can say that our goal to have in the next 18 months is to have a EBITDA margin on the operating company of around 30%.
That's impressive. I mean, are you in the operating company, are you following the sort of the model of XP in Brazil, trying to have independent advisors who you share the upside with of achieving accounts, but keep your fixed costs relatively low? It's been a huge success in Brazil. Would that be a fair description of what you're planning to do?
I think it's one of many examples that we follow. I think they have done an incredible job, and it's an amazing journey on what they have achieved, not only financially, but also the change of mindset they did in Brazil is fantastic. And part of our model, it is similar to XP, although we have also focusing more in our digital investments to become more a technology or digital company. All of our growth has been leveraged by technology. And comparing to other models, we have not only been successful with the big accounts, but also with the retail accounts. We have huge profitability by unit economics through the retail accounts as well.
Are you disappointed that Mexico overall hasn't seen a big growth in its capital markets, which has obviously held back GBM and other brokers in Mexico revenues and profitability? Or is this something that you expected all along? I think there's only been like 3 or 4 IPOs in the last 5 years in Mexico, trading volumes, far behind Brazil's. Did this come as a surprise to you, or did you expect it?
First of all, we need to increase our participation in the capital markets. We need to foster all these initiatives to become a good hub for the financial markets in Mexico and Latin America. We used to be a very important market, and now it is getting smaller and smaller. And I don't talk only about the business of GBM, but all what the financial markets can do for the country, increasing new participants, becoming more retail investors to have their accounts, having more exits to the venture capital firms and the PE firms as well, where they need to have exits. So the machine can keep on growing, bringing more entrepreneurs, having their money invested, but that the investors can have their exits and the retailers can have. So it's a very good virtuous cycle that we need to foster. And it is important of a lot of to participate at many participants, not only ours as intermediates, but also institutions, government, and everybody should be in there willing to increase that. With that, in GBM model, it is not dependent on the financial markets. Of course, that the financial markets would increase the economy and the dynamic of the economy, but the GBM model must continue to grow regardless the financial markets. Why? Because people need investment accounts. They need financial planning. As we always say, it is like a basic need. If you have a house and you have water and you all also need an investment account. It is so important to put your money to work because probably, or the majority of the people would not be enough once they retired in the workplace. So they need to look after themselves through an investment account prior to that retirement. No? So that's a necessity and requires a lot of education, requires a lot of investment, and we are willing to do that. I mean, that is our mission, that is our goal, and we're heading to that.
Pedro, in that sense, and following your answers to Damian's questions, what have you found that makes Mexicans less willing to invest like you wish they did in the financial markets? And do you think that the new regulatory framework for bringing companies to the market, do you think it'll help bring more options for investors in Mexico?
Your first question, Eduardo, it is about mainly three things. It's about first the access. Now it is solved because you can have access to an investment account literally in less than 5 minutes, fully compliant account. Second, and that was an issue before. That's why we have been growing a lot of in accounts. But the other two things are so important. The second one is education. How many friends do we have, Eduardo, that they don't speak about money or investments in their houses because probably it's not good manners? Or how many people that study laws or study another thing, psychology, has access to financial education in Mexico? So it is not in their day-to-day, the investment education. So it's about giving good content, becoming more natural to speak about it, and bring them access easily to start doing that. And the third one is that, all right, I have a little bit of education, I have access, and I can take my own decisions in a small bucket, but I literally need financial planning. So it is about the advisors. It is about having companion to start with your account and following your account, because naturally, all the questions for the people is like, all right, what happens if the stock market goes down to 20%? What should I do? Should I sell? Should I panic? Should I buy? So a financial planning and an advisor to follow on your account, it is so important. So we need to bring more advisors to the country. We have in Mexico around 1,000 investment advisors in the whole country. Brazil should be around 70,000. I don't know, 50,000. In the US, it's 150,000. We have 5,000. We need to bring more financial advisors to the ecosystem. It is those three things in summary. That is my view.
And what about the possibilities of having more names, more tickets in the stock market? That also generates excitement when it happens. But Mexico hasn't had one, like Damian said, for years. Or the companies that are traded have been the same ones for the last 20, 30 years. So there is no kind of like energy, emotion in the market. Do you think that could be addressed with the new regulatory framework?
I mean, the regulatory framework, it improves. It is not enough. We need to keep on, because, I mean, we need to measure the data, the results. Is it enough what we are doing? What else can we do? You need to bring the demand from the new investors. You need to bring the supply from the new companies as well. So GBM, we are working in bringing more investors. We need to bring more participants in the stock market. And if the numbers have said it is not enough, we need to do more. Of course, we need to put our goal. What do the companies need in order to come to the financial markets? So I think it's not enough yet, Eduardo. We are moving into the good way. I think the willing of everybody is there. We need to push it a little bit more, and I am optimistic that we can do something there.
You said you have 5.5 million active versus 24 registered investors. Do you have a goal of reaching 6 million by the end of this year, 10 million by the next 5 years? With all this that you've already have mentioned about financial planning, education, do you have an estimate of where you can be in the future?
We have estimates. We don't publicly say it, but we want to go as fast as possible. Our 2026, we're investing 3 times what we invested in 2025 in education and courses, content, and several more initiatives on that. We just recently opened a GBM forum in Mexico City. We're opening a GBM forum in Monterrey and Guadalajara in the next 3 months. And these forums is like an Apple store. No, you can go in, you can just take a class of whatever it is. You can follow the schedule of what we do there. We do everyday classes, talks. We bring CEOs, we bring funds, and everybody just to listen, just to come and listen. We need more participants that internalize more about the financial education. So we are bringing those investments. We want to have a GBM forum in every big city in Mexico. So we are investing 3 times. We want to grow much more faster. Mexicans need it, and our platform is ready to welcome them. So we need to keep on investing more.
Pedro, from the outside, GBM in Mexico looks like a kind of unusual combination of an old-fashioned sort of British merchant bank that invests in companies for the long term with its own balance sheet. In addition to that, an XP, as we talked about, with a lot of semi-independent financial advisors. In addition to that, a sort of interactive brokers with a great technology platform to allow independent investors, retail and institutional, to use that platform. And in addition to that, a kind of Robin Hood where you can onboard thousands of clients to buy and sell international stocks through the SIC or crypto, Bitcoin, and so on. So my question is, first of all, do you think that's a fair characterization? And second of all, do you see any kind of tension or any between managing all these different cultures of a Robin Hood and interactive brokers, an XP, a British merchant bank? I mean, how does the corporate culture of GBM sustain all these different branches of your business model?
Yeah, I think that's a good characterization, just in order to put it as an example. But internally, we are managed more efficient than having all of these companies together. No? First of all, what we have is a platform where any kind of investor, from retail to more sophisticated investor or high net worth investor, can have access, can have their real-time accounts with their phone, with their computer. And what we do is basically 2 things right now, and coming the next one, our third business. First is, it's a platform, it's an open architecture platform where any investor can get in and can take their own decisions, because all the products are available to everybody for the first time. I mean, actually today, as we are on, there's a follow-on a public investment in Mexico where you can go into your app, put your order, and you will have access to this follow-on or IPO, secondary IPO for a retail investor at the same price as an institutional investor, that it was only exclusive for institutional investors before. So it's an open architecture. You can access to this platform. As you say, it's a combination of Robinhood and Interactive Brokers. Yes, it is, because there's the whole marketplace of products that you can have. But there is also the second type of client that is like, I don't want to take my own decisions. I want financial planning. So you can have access to a financial advisor, a human financial advisor, as well as a digital AI advisor at the same time. That's the XP experience, or no, I don't know, the Fidelity experience in the US for that, or as a bank. So we treat it as what the client needs. And we have clients with different personalities, risk takers, and what they can find in GBM is absolutely what they need and the necessities. You have always access to an advisor just with a click, or you can have access to any sophisticated product or a simple product as well, just with a click as well. And that's a powerful thing on GBM. So you don't have many cultures in GBM. Everybody works for the same culture. It's the same. And the client chooses what they need.
Understood. And I guess it's for that reason that when you did the deal with SoftBank, you ultimately decided not, as I understand it, and correct me if I'm wrong, you decided not to spin off the retail digital platform, but just to have SoftBank invest in the public entity. I think they ultimately invested $75 million. Is that right? For a 7.5% stake. Is that why you organized the investment so that they were completely aligned with the rest of GBM and not to have two separate vehicles?
Correct. Well, just to clarify, SoftBank didn't invest in the public company. They invested only in the operational company. And in the operational company where we have our clients, again, it is fair to say that, Damian, what we want to take advantage is of, the thing is that we have been doing the same thing for 40 years. Just this time we're doing it for everybody. Before we were just doing it for sophisticated investors or high net worth investors or institutions. But right now, the same products and services that we're having for our clients, sophisticated clients, we have it now for everybody. And that is a very, very cool thing to have, powered by the same platform, by the same name, by the same company, by the same people working with the financial products inside GBM. So I think it's a very cool thing for everybody having access to these products and services, the same as billionaire or a millionaire in Mexico.
And is SoftBank relatively passive and letting you run the show as you want, or do they get quite involved in helping you define the optimal strategy for GBM?
SoftBank is a great partner because it has the best of the whole world. When they invest, they trust the management where they invest. So, they basically don't get involved in management changes or decisions, day-to-day changes in our company. What they do is they get involved knowing every inch of GBM. They understand everything so they can see where they can help. They are very, very smart people working with us in all of our ideas. When we need talent, they try to bring it. When we need companies to see or to watch them, if we buy them or not, they are involved on that as well. They are involved in the strategic things, not in order for them to take the decision, but just to put them in front of us many times when we probably didn't see some or other thing. They are fantastic partners. We hope to work with them for many, many years to come.
Moving on to another partner, Mercado Libre or Mercado Pago. Of those 5.5 million active accounts, how many are related to Mercado Pago?
Well, there are many. There are many accounts of Mercado Pago. I think we have done a very good partnership there in terms of democratizing the access to simple products, because Mercado Pago it's offering powerful but simple products right now. We are very happy with the partnership we are doing. I think first you need to bring attention and at least people need to experiment with a simple product at first, so they can have the second step or third and fourth and fifth step for their financial planning. We're happy with the partnership. We don't disclose exactly the number, but there are so many of those accounts part of our partnership with Mercado Pago.
Pedro, on that sense, the competitive landscape is rapidly changing. Fintechs are here. Bitso put out a product that allows people to buy shares, ETFs, fraction shares. What can you tell us about the technology changes in the market? And obviously, GBM has had a very interesting technological arm, or you've always been ahead of the curve in a certain way. But what can you tell us about it?
Mexico is a huge market. I mean, it's a very, very big market, and they need products, and people need products and need services. I mean, there's no one monopoly in this industry anywhere in the world. It is. So it is good to have, what people need are choices. What people need are good services. And the way to bring it down is through having participants offering these products and services. Different to other competitors is that we believe very much not only having a fantastic technology experience, but also bringing them an open architecture for their decisions. But thirdly, a financial planning advisor. You need a financial advisor in your hands. Whether you want it or you don't want it, but you have the possibility to have this companion. And Eduardo, it's probably the vast majority of the people in Mexico that needs someone to guide them to having their financials putting in order for them, for their families, and ready for their next generations. And that is, and people, if you are not a financial professional, which that is the great majority of the people, they need this practice, they need this service. So we have been investing very much on this service of financial advisory, personal financial advisory for our clients, and we will keep on investing very much on that, because that's the way people can have the greatest of odds on their financial success. So we are investing much more than in technology. We're investing in advisory, in people, in training, so they can give the best service of all through our clients.
Before I go into a softer, gentler topic, which is restaurants, Pedro, is AI a tool that you are thinking about in terms of this financial aid?
Of course. No, I mean, AI has been the biggest investment we did in last year, and will continue to keep on this rate for the next years. AI brings huge possibilities on serving better our clients, serving better our advisors through AI tools, processes, automatizations. So AI is at the top of our agenda.
Now, on the gentler side, how is the restaurants business doing? What can you share with us about Cosme, Siclo, all the other ones?
Well, the restaurants is a pleasure to be part of this group. Amazing talent of people not only cooking but also running the company. It is a pleasure for me because I basically participate more in the board and as a client in that company. The company is doing really well, but more than that is that having one of the best restaurants in Mexican restaurants in the U.S. It feels we feel very proud. It is kind of an embassy in New York. No, when people go there, they talk about Mexico, they talk about their flavors, they talk about the culture, and it's great to bring that experience to the whole world in New York and in LA. So it is a pleasure to be part of the group. I'm very involved in the group, and we want to continue to grow. We have always in our minds having this mindset of what else. It is not only having this, what else we can do to bring the culture of Mexico around the world. So there are good surprises coming
I
there.
was going to ask you, where's the next stop?
No, the next stop, it's another one in New York, which is going to be a very interesting concept. What we're doing there of tacos. You know, Enrique Olvera has a very popular taco omakase in Pujol in Mexico City. They're fantastic tacos and experience. That is something related to that what we're doing in New York.
And what can you tell us about Siclo?
Well, Siclo, it's also very proud I'm very proud of that company. It was founded almost at the same time as Cosme, 10 and a half years ago, both, to do well to people. Not in GBM, we do well for their wealth. In Siclo, we do well for their health. We have 1.2 million physical reservations per year in Siclo, around 55 different studios in 5 Latin American and Spain countries, bringing joy, health to people every day. It's fantastic. In Ciclo, the way we think is we don't want to be your exercise hour of the day. We want to be your best hour of the day, regardless of whatever you're going to do after that. So it is great to say that we basically have been growing Ciclo with zero marketing spending. Zero marketing spending. It is whatever we were going to spend in the marketing, we spend it in the product and in the experience. So I think if you have been to a class, Eduardo or Damian, you should go. It is a great experience. It is amazing. You're going to have an amazing hour of your day spending. And it is not only cycling now. It is we have now 6 different disciplines where you can choose about strength or bar, or in Peru we are opening Pilates now, etc. So we are expanding on the wellness community there.
Pedro, thank you so much. I think we could carry on talking for hours about how you're making Mexicans, trying to make Mexicans wealthier, healthier, and enjoy life through great food in the great Mexican food, being an ambassador for Mexico, and Mexico food in the US and pioneers in that. So thank you for sharing your time, sharing your experiences and your knowledge with us and with our listeners. I hope one day you can be back on the program.
No, thank you so much for the invitation. Really, I really enjoyed to speak with you both, and hope to see you soon. And if it's in Ciclo or in Cosme, it would be a joy to have you there.
Yeah, I was in Cosme 10.5 years ago. I was in Siclo 10.5 years ago, and I'm an account holder of GBM. So you have a good market share of my life, Pedro.
That's fantastic, Damian. That's fantastic.
Next time
You need to come back after 10.5 years ago, Damian. Hope to see you soon. Thank you so much.
Well, really pleased to have with us today Shauna Hemingway. Shauna is a former top Canadian diplomat, be posted in different places around the world, including in Mexico City. She's now based in Mexico City. She has her own strategic advisory firm. She's a board member. Shauna, how are you today?
Yeah, I'm doing great. It's been a great week for Canada and Mexico.
So tell us a little bit how this huge trade commission went. This has been in the front pages of Mexican newspapers pretty much. every day since the weekend. How did it go versus your expectations?
I think it exceeded my expectations, actually. It's larger than perhaps we expected when it was beginning to be organized. So, over 1,900 business-to-business meetings took place. We had over 240 companies and trade associations here on the ground. And of course, the Business Council of Canada that I represent was quite involved. And in fact, we signed an MOU with a partner that we've been working with for many, many years. But I think it just is the point of departure for a much closer and much more in-depth, more sophisticated relationship between the business communities in both countries.
What were the main asks, if you had to summarize, from the Canadian business community to invest more in Mexico? And what were the asks, if there were any, from Mexico to the Canadians?
I'd say what we're all seeking right now is a bit more predictability, stability, and definitely from, I think, both business sectors in both countries, we're looking to see the review and renewal of the USMCA is kind of critical in that point. So we have a lot of discussions on the future of North America, the future of our trade agreement, and how we'll work with our counterparts in the United States to ensure that happens. But in terms of the business environment here, we have a lot of investment. So just in the last, I'd say 10 years, it's tripled in amount in terms of Canadian investment in Mexico. And that just shows how bullish our companies are about the future of this country and the future of the Mexican economy. But along with that come, what we're looking for. So really our companies are only looking for predictable rules. A country is sovereign and should set its own rules to reflect the interests of its people and the interests of its government. And all that I think Canadian business asks for is that they take a transparent approach to that so that our companies can make good decisions when they're deploying capital. They need to answer to their boards of directors and whatnot. So we just need to know what's coming down the pipe. And I think if I could speak on behalf of at least our membership in the Business Council of Canada that are here in Mexico, we've been very pleased with the communication that we've had with the Sheinbaum government and how forthcoming they've been in terms of what their vision is for the Mexican economy, because that allows us to make informed decisions on how to deploy capital.
Will change? I mean, what will the Mexicans do that they weren't doing before as a result of this need for greater predictability?
The things we've seen, of course, since the President Sheinbaum came into power was the launch of Plan Mexico. And I think that's been critical in communicating her vision for what she wants to see in terms of Mexican development and the focus, industrial policy, if we can call it that, for the entirety of her term up until 2030. And that's been really key. There's a lot of debate around, particularly in Mexico, about how foreign investors will feel about different policies. But what's really most important is that there's consistency, transparency, and dialogue. I think we can't ask for more than that. And in the times we've had a number of our members have come down to meet with the president and her cabinet on several occasions. And that's been obviously communicated publicly. But the discussions have been positive in terms of this is what we intend to do. We're making some changes. One of the areas that changes are taking place is in the tax policy and the implementation of tax. And I think there has been good dialogue around that. We recognize that governments in all parts of the world, and particularly North America, are looking to ensure that they, create a revenue stream that funds their, government processes and government programs, and we understand that. And I think what our companies are asking for is that not change quickly, that there be consultation, that the companies are given a chance to adjust and respond and be able to take decisions going forward. And I think that's the course we're charting right now bilaterally with Mexico.
I was with a Canadian friend who was involved in the meetings, and he said the Canadians were focused on two issues. One is the judicial reform that they feel, or at least in this case, has kind of undermined the even further the quality of the legal system in Mexico. And secondly, the security situation, which is especially a big deal, as we've seen recently in the mining sector. Would you agree that those are the two kind of flashpoints for that need to be sorted out for Canadians to invest more in Mexico?
In fact, the two issues that have always been top of mind in the discussions that I've been part of for our membership and with the companies that are operating here have been, again, the tax system and how it's implemented. Are the rules that were set, are they being followed? Are they being understood? Is there clarity in terms of that? And the number two issue has been regulatory harmonization within North America, and how, if the governments can work together to create a joint platform, how much easier that will be for North America to compete with the rest of the world, and for our companies to invest and grow prosperity in both countries. I have heard a significant amount from our Mexican counterparts about the importance of rule of law, and of course they have views in their own country about things such as judicial reform, and we respect that that's an important discussion that's happening here. And I think, again, the most important thing for business is that the rules are reliable, consistent, that there is recourse, that the process for companies in the courts is predictable and transparent and reliable. But again, this is a new reform, and I think we're all waiting to see how it's implemented and how it plays out.
A couple of years ago, and I think it came from Ontario, not from the national government, but there was sort of fear in Mexico that the Canadians would throw Mexico under the bus and reach a deal with the U.S. Without Mexico. Now it seems that the Americans want to throw Canada under the bus and maybe reach a deal with Mexico, or maybe not reach a deal with anyone. And there's a sort of sense in Mexico that maybe Mexico would be willing for Canada to be thrown under the bus if it meant getting a good deal with Trump. How do you see the situation right now? And would you kind of agree with that characterization of how the dialogue and the narrative has changed over the last 2 or 3 years, with now Canada being a bit of a sore thumb in this whole process?
I would say that the dialogues and the discourse at all levels in Canada and Mexico have been very different. And I do question sometimes why it's so different. I've heard much more optimism about the negotiation process from Mexicans outside of the business community. I think within the three business communities, the clear path forward is for the USMCA to be reviewed and renewed. And if we could establish that stability as fast as possible, it's a very common vision across the business communities. But you're referring more, I think, to some of the political discourse and discussion, and it is interesting how the divergence we've seen between Canada and Mexico. And I think that, again, there's an element of noise in the whole process. So we're hearing a lot of noise, and I think in order to be able to look forward a couple of years or even a few months down the road, we need to sort of block out some of that noise and pay attention to what's actually happening. So what we've seen is that President Trump has always put Mexico and Canada in a special category in his second term, despite very different approaches from both countries to their bilateral relationships with the U.S. and the North American or trilateral discussion and at times debate that we're seeing. Despite all of that, President Trump continues to link our futures, right? There's always been this special category for USMCA, and that's protected a lot of our economic interests in both Mexico and Canada. And the governments have recognized that, how fortunate we are to have the best deal with the largest economy in the world. And that's really been to the benefit of all three countries and all three business communities. But you raise a really valid point about how the discussion and the discourse can be so different, and at times the business community would say unhelpful. Certainly, the business community has been completely consistent in wanting to preserve the trilateral nature, because it's the trilateral reality. It's the way our companies are functioning. It's the way industry has developed. It's the way we compete with other regions in the world. So for the business community, there's never been a question of the validity of having a trilateral agreement in North America, and how difficult and damaging it would be to undo that economic integration. But one thing is facts and reality and geography and math, and another thing is politics.
Hi, Shauna. Eduardo here.
Great to see you, Eduardo.
Great to see you too. I'm very happy you talk about noise and reality, because I think the three corporate worlds of Mexico, Canada, and the U.S. are all in agreement that the free trade agreement is much needed. And yesterday, or I don't know if it was yesterday or the day before, we had an interesting sign from the USTR talking about the potentiality of eliminating tariffs on steel and aluminum, mainly because it increases the cost of products made with those metals. Is that, in your appreciation, a good sign that maybe economic reality is sinking in into the Trump administration and will help the U.S. trade renegotiate itself?
Absolutely. I think both Mexico and Canada and the business in the U.S. has been focused on removing those 232 tariffs and getting back to respecting the free trade and the conditions of free trade that we established and have lived with for the last 30 years. So definitely that is a top priority. Also, there's been discussion of sort of steel, aluminum, and energy in Canada, and a bit more discussion with the U.S. of steel, aluminum, and autos between Mexico and the U.S. And both discussions are very valid. It's not really been, if you think about the existence, 250-year history of the U.S. and our North American history, this is kind of a very short moment of time when we're living, even the time we've lived with these tariffs. It's really quite a short period of time, even in the life of NAFTA and USMCA. And I think we need to keep that perspective and recognize that we need to be building a vision going forward. And getting back a little bit more to the earlier points about this, I think we need to somehow establish an optimistic vision for our countries and for North America. I think people today need that. A lot of uncertainty, a lot of geopolitical uncertainty, but who wouldn't trade places with Mexico or Canada in terms of the economic opportunities in North America? I think there's a lot of countries in this world that would love to be dealing with the challenges we're dealing with today because of all the benefits and prosperity that we've generated over our history as a continent.
Does that mean that we have failed in showing to the public in the three countries, well, in Mexico less so, I would say, but the benefits of free trade? Have we not conveyed enough that we all win with each other? And yes, we do compete, but necessarily overall we prosper from specializing in certain elements of our three different economies and standings in the world today?
I think because it's gone so well, we haven't been focused on it, and that's legitimate, right? That's valid that we have something that's working really well. We don't wring our hands each night over it because the integration has been going so well. And so we do have both those bilateral relationships with the U.S., if I could say, have had lots of little irritants, big irritants at times that have affected people, have affected business, have affected prosperity over the years. But they need to be taken into perspective, which I think is what you're getting at, to be able to have perspective as to how important those irritants are in the overall picture and the overall prosperity and the future that we're building. In terms of how we deal with it right now, I think if we're going into negotiations, if we look at this as a negotiation between our governments, all three governments on various matters, when you're doing negotiations, and I did trade negotiations early in my career, and one of the worst situations to be in as a negotiator is to go in full of emotion and unable to clearly identify and see the facts and not have the data at your fingertips. And no one in an emotional state takes the best decisions they could if they had as they talk of in Mexico, right? The cool-headed approach and strategy. So if I had to choose myself, I would hope that our leaders can try to eliminate the noise, eliminate to some degree the emotion, and be very careful about stirring emotion in the public because it's a hard thing to peel back later if you go down that road of stirring up a lot of emotion, particularly among friends. It can be, as any school kids will tell you, it can be hard to roll that back if you've started creating some of that emotion and some of those debates in the schoolyard. So I think we should be careful about that.
Yeah, to get the genie back in the bottle might not be as easy as we thought. Now, obviously, the presence of the Canadian mission in Mexico and Carney's famous speech in Davos indicates that Canada, Mexico, and other economies need to diversify. Is that a sign of concern about free trade between our three nations, or is it just a smart tactic to follow, given the rhetoric coming out of the White House?
Approach to that would be trade with the U.S., trade with North America, plus, plus, plus. Absolutely. Right. And in Canada, I think since we began as a trading nation, we've questioned, do we depend too much on one market? But at the same time, I think those who are talking about diversification need to recognize that, companies can't be, as I've heard people say, companies can't be legislated to trade with individual countries. Platforms can be created through legislation and trade agreements and regulation and customs policies and procedures. Absolutely. The platform can be changed to facilitate different relationships, but companies can't be forced to deploy their capital in one nation or another. And they're going to go where the conditions make sense, right? As they say, to make $2, $4 or $1, $2. That's what capital is looking for. And I think what can get lost in this world where we have this huge focus on, the virtual economy and in terms of, how borders are treated between nations in a world that has AI and all these other online tools and instruments, I think we lose track of the place we live in, and we do still need to build physical things. We can't lose track of that. We spend an awful lot of time connected to our computer, but our computer is also a physical thing. And when you're talking about physical things, distance to market, time, all these things still matter, right? And geography still matters. And I think despite different trade agreements that we both have. We have 15 from Canada. Mexico has 14 trade agreements. We both have 51, 52 trading partners. But look at the concentration. So we've created platforms with other regions of the world, but that doesn't undo the force and importance of geography and the community that we have in North America and the extent to which people understand each other's countries in North America. That's very special, and we shouldn't try to diminish or undo that. We should be looking at this plus, plus, plus. Take the best of what we have at home and go out into the world and create more competitiveness and compete and win and trade and bring that prosperity back to people to fund our social programs and to fund our education systems and our health systems and all these things that would be critically important for our generation and the generation to come.
You're totally right. Business go where profits are. And in that sense, what does Mexico need to do you think, more to entice Canadian companies into the country to invest here and be partners with Canada?
I skipped over one of the top issues that was raised earlier, which was the security situation. I think there's no doubt that I think the Sheinbaum government clearly sees that this is probably the top area on which they need to deliver during this mandate. So the situation involving security in the country is very, very important. And I didn't mean to suggest that Canadian companies aren't very, very attuned to that. We are, certainly when we're here. And I think that what the approach for Canadian companies is to maximize their local knowledge, local understanding, to understand the terrain in which they're operating, and based on that, factor in the security costs. So it's not actually the top issue; it's more a consideration, and it's not the top concern that's raised with government, because we know that the government is working on this, and we know it isn't something that can be solved overnight. And I think going forward, the message that we'd want to leave on the issue of security is the importance of collaboration. So the importance of, companies and citizens and the not-for-profit sector working with government on, important priorities around security. And that means, being able to share information securely. So, companies want to be working with the government to help the government establish the security conditions in which people can live peacefully, work peacefully, and of course produce and whatnot. And so that would be perhaps the area of focus I would suggest, is that collaboration and communication across all sectors in the country. And And I know that obviously corruption is a concern, and when you're talking about security, and I see a lot of effort being made to address these issues in Mexico, and I hope that the authorities feel they have the support of the Canadian business community in tackling this.
Shauna, on that note, positive note, we could continue talking to you, but our time is up. Thank you so much for joining us and sharing your knowledge and time with Mex Moves. We hope we can continue this conversation on another time.
Right, my pleasure. No, nice to talk to both of you.
Thank you. That's it for today's Mex Moves. Thanks for listening. Please review us, share us, whatever you need. We'll be back next week. Thanks again, everyone.